Hi, everyone, and welcome to From the Ground Up. I'm your host today, Karol Weyman from Outdoor Coffee Shop, and we're lucky enough to be here with Hurley Fox, who's the owner of Fox and Partners. And we're going to talk about some financial challenges and opportunities contractors face while growing their businesses. Hurley, welcome to our show. How are you doing today?
I'm great. Thank you so much for having me. It's great to be here.
Yeah, if you could introduce yourself for our viewers, that would be great.
Sure. So I own and run Fox Partners, and we're an outsourced accounting team, controller, CFO for small businesses all across the country. We work with a couple hundred businesses in every type of industry from everyone's domestic, so we work with only domestic small businesses. And then revenues typically range anywhere from a couple million to 80, 100 million is kind of our peak. For some of those businesses, we're the entire accounting team. So we're doing the transactions, we're doing AR, AP, daily recs, that whole day-to-day thing, along with monthly reporting, monthly close, forecasting, budgeting, and CFO stuff. For other businesses that are bigger, we just sit on top of their accounting team because a lot of small businesses have some really good administrative people who may be good at entering the transactions or doing the kind of day-to-day stuff, but may not necessarily know accounting or best practices, or is there a better way to do it? So we can sit on top of them, really make sure that all the accounting is there and that the accounting best practices are being followed, that our balance sheet ties out. They have somebody they can go to as a question of, hey, how should I book this transaction? And then from there we can take it and do all the other stuff on top of the kind of the daily transactional items.
Wonderful. And it's all online. This is an application that you're using. Is that correct?
So most of the accounting that we're doing is using QuickBooks Online. We work with a few other, Sage, QuickBooks Desktop, Xero, Foundations, some random ones here and there. All the work is done fully remotely. The whole team is domestic. Most of us are within a couple hours of our office here at Basking Ridge. Most of us come into work every single day, but for our client perspective, it's fully remote, and either the accounting and all that stuff is in the cloud, or we have a remote, desktop situation where we're remoting in and getting what we need.
Okay. And what's your background and to be able to put all this together?
So I actually went to school for teaching. So my background, education-wise, is in education. I'm licensed to teach in New Jersey. That was great. Learned a lot about how to deal with people and manage people. Kind of taking those teaching classes and learning how to be a teacher is a really great 101 for how to be a business owner. So I think some of those classes more business owners could benefit from. And when I was in school full time, I worked full time with a small business here in New Jersey. We were doing, a few $1 million a year, and I got to work every single day with the president of the company. Learned a ton about how kind of the ins and outs of a small business is supposed to work. We were doing construction management, so I was exposed to kind of a whole bunch of different things from the business side. And so once I graduated, got my license and all that jazz, I stayed in the business world. And then I went to go work with an accountant who I knew from my time at that construction management firm. And when I was working with the accountant, I realized business professionals like CPAs and financial advisors and lawyers and anybody with initials after their name do a really bad job of helping business owners. And so, I didn't know a whole bunch at the time, but I thought it was kind of crazy that these business owners would come in and give their financials or their paperwork to the accountants, and then they would give back the tax return or bookkeeping with no conversations, no questions asked, no verifying anything. And so we started a little program there where we would do the financials, but then I would talk with the business owners and say, hey, do you know why this is happening? Or do you have any questions about this? Or this is what you're looking to achieve? Or is this helpful to you? And so then we started to do some things each month with those business owners. We made some people some money. That program started to grow. It started to grow. It started to grow. And so then I eventually took our little plan that we were doing, started Fox and Partners at this point 7 years ago. And then, early on, it was a few smaller companies, and then I met somebody who, essentially was the first really big client of mine, and he had grown a huge business and sold it a couple of times and had a bunch of different other business ventures and investments. So I learned a ton from him. I went back to school for accounting, got my master's degree in accounting. And then after a few more years of where we were growing, kind of word of mouth and a couple clients a year, I started to grow a little faster. And then I hired people who had worked as a controller or CFO for multi-$100 million companies for decades. So hired people with, 30, 40 years of experience in much, much larger businesses. And so from them and working with them and working with my clients, I really learned, okay, here's how accounting's supposed to be. Here's how to, onboard a client. Here's how to review a balance sheet. Here's how, the report should look, et cetera, et cetera. And so today we're 16 accountants, and I've learned a lot from those that work with me, and then also from our clients.
Yeah, I think that's wonderful, and there's obviously such a need in the business to have that liaison, to be able to have that
hmm
connection, to be able to connect the business owners with the accountants, because it's not necessarily the easiest transition. So I think that's wonderful. So what do you see as some of the biggest financial missteps commonly seen in the outdoor contractors? What mistakes are they making?
Yeah. So I would say a few common mistakes just across all small businesses, and even personal financials together as well. So for the mistakes are A, not knowing our gross margins, right? So thinking revenue is everything, and so you're growing revenue, growing revenue, growing revenue, and you're growing your team, but then wondering, well, where's all the money? Where's the cash going? And so the first thing to understand with that is, well, what's your gross margin, right? So if you get $100 job, how much of that job is having to pay for the job itself, right? So nothing else, but just for the materials and just for the labor of that job, how much are you spending? Is it $30, $40, $50? And most businesses, especially the contracting world, don't have that number super dialed in, right? So are you tracking all the supplies just in general that are job facing, but then to jobs specifically? Right? That becomes a little more of an administrative task of, did we track the purchase was for this job or for this customer? And then are you tracking all time, right? So is all the guys who are doing all the labor, are they tracking per client and per job? Because if you're not doing that, you don't really understand your gross margin. If you don't understand your gross margin, you don't understand, are you pricing correctly? Or if you were to grow, how much else would you need to spend? Or how much cash you need to keep on you? So that's kind of one thing, right? It's really dialing in gross margin. The second is understanding how cash flow in your business works, right? So income does not equal cash flow for a lot of reasons, and that is one that is really tricky for small business owners to kind of fully understand. The first is, as everybody knows, if you send $100 for an invoice, that doesn't mean you have $100 in your bank account tomorrow. So clients take a long time to pay, and payment terms are really important. And then how are they paying, right? If they pay via bank or check, you're having different fees than if they're paying via credit card. And then if you have debt and you're paying off those debt payments, or you're paying yourself as an owner and you're taking an owner's draw, your income doesn't go down, but your cash goes down. And then you're taxed on income if you're a pass-through entity, right? And so you could have $10 left over as taxable income. You owe $3 of that as a tax payment, but you could have used those $10 to distribute or to pay off debt early, or to buy an asset, or to pay off debt. And so you could have zero in the bank, but you owe $3 in taxes, right? And so really understanding the differences between what your profit and loss show as income, and then how the cash is actually moving through your business, and cash timing, really important.
That's great. And you help business owners like from top to bottom being able to
Yeah.
navigate all of that. That's
Yeah,
great. That's
we do the
great.
whole thing. So the first thing we do is we make sure the financials are correct, right? In a really quick way, and I learned this from one of the CFOs that works for me, is and she had worked in large companies for decades, and so had a ton of experience. And she was like, look, you have to just make sure you look at the balance sheet. Does every item on the balance sheet tie out? Can you find a piece of paper that says, okay, my balance sheet says I have $10,000 in the bank. Where's the reconciliation statement or the bank statement that says that? Do you have a loan agreement? Do you have an asset purchase document? Do you have every item on the balance sheet should have some sort of paper that kind of says, yes, this amount is real. And if that is true, you have a real monthly close, and your financials are going to be in pretty good shape. 95+% of the businesses when we start don't have that, right? And so it's first just making sure the financials are accurate. And then it's setting it up. Okay, if they're accurate, do we have all the cost of revenue items in the cost of revenue section, right? So we actually have gross margin on our financials. And then are we consistent across the board with all of our, vendor categorizations and things? And so then the financials are accurate, then they can start to tell a story. And then from that, we get feedback on, okay, here's what's working, here's what's not, right? Do you have too much overhead? Are you paying your guys too much in overtime? Are your supplies too costly? Are your financing fees too expensive? Is your interest too high? Is your, turnover of customers or talent costing you? All that stuff is shown through us in the financials once they're accurate. And then from there, we can put together a plan with the business owners to say, okay, look, your financials are telling us that these are your problems. What do you feel about that? What do you think about that? And how do you think we should solve it? Here's how we think we should solve it. And then we put a plan together, and then we check those financials to say, okay, we think we're going to solve it by doing blank, right? So if customers pay via credit card, we're going to have them pick up the fees, or we're going to give incentives to customers to pay early, or we're going to ask our big vendors, hey, if we do a certain amount of volume, can we get a discount? Or we're going to do some incentive program for employees to get our employment costs down, whatever it is. And we think, look, this is good. These things are going to solve the problems that we see. Well, then we're looking every month to look at the financials to say, did what we do actually solve the problem? And then we're kind of testing our hypothesis each month with the financials. So we help get the financials in order. We help keep them current. We can help with APAR. We do collections for clients all the time. We help with financing. We help, across the board. And then from there, we're meeting and putting together reports that say, okay, if we were to do this, what would happen? Or we can start to project out, or to have a cash flow forecast of here's what the next 13 weeks look like for your cash flow. Really helpful for business owners, and they've never had some of these tools before.
So how can contractors tell if their projects are profitable? Like, what are some signs that their business may have issues or opportunities with, profitability?
Yeah. So, you can, if you're properly tracking time and material cost, right? Which is a big if. And then depending on the jobs, the other kind of thing on the growth side is, are you doing work in progress, right? And so if you're doing a job that takes 8 weeks to complete, right, and somebody pays you all in the second month or all in the first month, whatever, those timing imbalances are going to make your financials look a little wonky. So you want to do some kind of accounting work on there to get your timing correct, both from the revenue and the income and the expense standpoints. Assuming that that's all correct, then you want to look at your gross margins, right? So it could be 50%, it could be 60%, it could be 10%. Really depends on the type of business and the industry on what you should be looking for. Let's say you're looking for a 50% gross margin, or your industry average is 50%, or you're historically you've done 50%. Then you'd want to look to see, okay, are you doing that? And then if you're doing different things too, right, you may have different gross margins. So if you're doing one type of work, like if you're doing a maintenance thing, that might have a different gross margin than if you're doing a full install, or a design build is different than, okay, hey, here's what we're given. So you want to know your margins throughout to understand what you can sell and market, or do you need to change pricing on one and not the other? And then you want to make sure that, okay, great, your gross margins there do we have enough volume to pay for overhead costs, right? Because if your overhead costs are $100,000 a month, even if your gross margin, if you're doing $1,000 in revenue a month and your gross margin is amazing, you still don't have enough to cover your overhead, right? And so ways to kind of feel like, hey, this makes sense, or this doesn't, it's just, are you paying yourself what you're worth? Do you have money in the bank to consistently run payroll and pay bills? Is your debt kind of manageable? And then you should have, income. You should be, 10-ish%, give or take, on income. So if you're doing $100,000 in revenue a month, you should expect around $10,000 in income, or $10,000 left over each month, depending on kind of a bunch of different factors. But that's a really good baseline. If you're way off of that, then it's worth kind of peeling back the layers to say, well, I only have $1,000 in income. Kind of what's going on, right? If you're a 1% income, that's something for you to kind of peel back the layers, and then you look at the financials to say, well, where is the problem? Is it sales? Is it pricing? Is it cost of talent? Is it cost of materials? Is it timing? Is it overhead stuff, et cetera, et cetera? And then that will tell you kind of where the problems are coming in from. So, I would say everybody, you should be paying yourself what you're worth. If you can go work for somebody else and get paid a lot more money than you're making today, that's kind of something to look into. You want to have money left over to make sure you're paying all your bills, and you shouldn't be too stressed about that. And then finally, you should have a little bit of money left over, on top of paying all the bills and payroll and all that stuff. You should be able to issue yourself a distribution. You're doing all this work and you're taking in all this risk as a business owner. You should be compensated for it.
Wow, that's a great way to look at things. So with contractors, there's always a busy season and a slow season, and there's ebbs and flows. And what advice do you have for contractors to manage that?
Yeah, great question. I think there's a few different ways to handle that. The first is offering different services or doing different services to different people is helpful. So I was just talking to an HVAC business out in Denver, and they only do residential. And he was having this issue of he has 6 months of profitability and then 6 months of not profitability during the year. And that's tough from a cash flow standpoint. Unless your 6 months are really profitable and enough to carry you over, you have this problem of you got to lay people off, then you hope they stay around, and then you got to hire them back, and that talent turnover is so costly. And so we were talking, and one of the things that came up that they could start looking into, not necessarily to do this tomorrow, but just to look into it of, hey, could this be something we do, is to look at commercial work on the maintenance side, right? And so, okay, great, you're doing all these installs and you're doing all this maintenance work on the residential side. On the commercial side, they are not as seasonally driven, and so you might be able to pick up some work in the off seasons. And even if you just break even in those 6 months, you're putting yourself way ahead because you can keep the guys on payroll, you can keep your bills going, and you can actually take your profit as distributions. For others, especially in the outdoor side, it's a lot of plowing in the winter and things like that, where you're doing a different service to different people, and so that's an option for you. Of course, if you are profitable enough, it's really important to know your numbers to say, okay, hey, we're going to be profitable 8 months of the year. What are those numbers exactly? What do I need to have in the bank to float myself for the 4, right? So really knowing your numbers is going to help there, because it's hard mentally and emotionally to have a month where you might have $100,000 extra in the bank and think to yourself, you know what, in 6 months, I'm really going to need this, so let me just put it aside for the rainy day. But seeing the numbers itself and having an account set up where you can move it and it's going to earn a few points of interest, but it's kind of out of sight, out of mind, is another way that could be helpful. So, offering different kinds of services, offering the same services to a different buyer, and then, or really knowing your numbers, dialing that in, and just being really kind of focused and disciplined on that.
Right. That's a lot of planning for sure. So, what reports or systems do you suggest every contractor put in place regularly to better understand the health of their business?
Yeah, so you should definitely be tracking the time of your guys. So is everybody clocking in? Are they clocking in to specific jobs and specific customers? And is somebody on the management side reviewing those timesheets, right? Because your biggest cost likely is staff and payroll. And if you don't have that number dialed in to like the penny, you're doing yourself a really big disservice, because it's the most expensive thing. It's the most important kind of numbers for you to look at. And so you should be looking at, if you do offer different types of services, you should know your cost of labor for each service type, for each client type, to know, should you fire a client? Do you need to have a conversation to a client? Or is this a great client? You want more of them, because then you can talk to them and say, hey, can we do a referral, something? Because good clients will get you good clients typically. So you want to have staff and time really dialed in. You want to have a process where management is consistently reviewing that, because I'm sure this is going to shock all the business owners out there, but not everybody puts in time 100% accurately 100% of the time. So having somebody who's a large part of their job or a part of their job is reviewing that is key. Then dialing in how you're purchasing. Like, could you buy at a different time of year to get a bulk discount? Or could you say, hey, if I pay within 10 days, can I get a discount? Or can I refer you other business to get some sort of discount, right? If you can get a few points on your cost of materials, that'll go a really long way. So I would have those numbers dialed in. However they want to track their time, whether it's through payroll, whether it's a job, tracking software, whether it's through project management tool, however it is, as long as your team can consistently track time easily and get feedback on that, and then you can track cost of that work on the material side by the project, by the client. Those two things, you're already, a long way there. From there, you want to have financials that show you your margins, your year over year, your month over month, how you're doing compared to the industry. And then finally, you want to understand just your free cash flow. We did all this work. We have all this revenue. We did all these jobs. At the end of the day, how much more cash do I have today than I did last month? If you don't know that number, that's the most important number for you to know, because that's why you're doing it, is to have extra free cash flow and to increase the business owner's net worth each month.
Wow, that's great. And you keep saying, there's so much more technology in the world, but technology for outdoor contractors and automation. How are technology and automation helping contractors become more efficient and financially organized?
I think on the technology and the software side, it's interesting. There's almost so many tools out there that it becomes kind of like burdensome to go through. You always hear about something being better, or you're having your teams, spend time learning this, and this. I think it's really important that the best software is the software that works for you and your team. So if you actually use it, great. Don't go find a better one. Don't go do a course on how this other one's supposed to work. And if you decide this is the software we're going to use, make sure, especially in the slow months of your season, that your team is fully trained on everything that software does. Because I think a lot of people look for answers that your current software might already have. So that'd be one thing, just kind of generally of you don't need 1,000 tools, and you don't do you want to make sure that on the few tools you guys and your team are using, your team is fully understanding on how to use it the most efficiently. In terms of what's really worked, I mean, again, like time tracking. Today, it's an app on the phone, really easy to click on and click off. And you can geolocate. You can, make sure that it needs management approval. You can build all those things in from the phone that do make that a lot easier than it used to be. I would say when purchasing and expenses there's so many great tools out there where, somebody swipes a credit card, they can categorize the transaction themselves. They can book to the customer, to the project on their phone. They can take a picture of the receipt. They can get reimbursed through the phone. So expenses and credit cards and all that stuff, there's great technology there that do make that easier. And then, in terms of like project management, that's what the days of everyone having to go to the yard to start the day and then say, here's a piece of paper and here's where you're going today. Now, everyone should have an iPad. Here's where you're going. Here's your jobs. In some cases, depending on the industry, they still have to go to the yard to pick up the truck, or the teams are meeting. But in other cases, some guys have a truck on them and they don't need to go to the home base first. They can go directly to their first job to start their day, right? And then tracking that and seeing, okay, if we have 10 jobs today, let's make sure we're doing it geographically oriented, so we're not going, kind of A, B, C all over the place. Instead, it's, okay, we're starting here, then we're going here, then we're going here. So those are a few ways that technology has really improved things on the contractor side.
And do you guys, when you take on a client, do you review their tech stack? Like, do you look at their tech stack to be able to
hmm
understand like how it works and maybe get rid of some things that aren't really useful or fine tune them?
We do, and we, I would say one of the things we do, because we're new and because we have so many clients all over the country, we understand what works and what doesn't, but we also really have to make sure we understand it ourselves. And in that process, it's amazing of how we're really some of in some cases, we're the first people being like, okay, but you do that and then what? Okay, you do that and then what? Well, let's write that down, right? And let's make sure there's a good where if I don't know anything, I could get a piece of paper or watch a video or read this thing, and it would tell me, okay, here's how they want me to do this. So in a lot of cases, it's reviewing the tech stack to make sure the software kind of makes sense, which is great, but then making sure, how do you actually use this and is it effective? Because I think a lot of people do a lot of work that may not be moving the needle all that much, and then there's some bigger things where, hey, you're doing all this work and it's only making 1% difference, and you're not doing this thing that could make a 10% difference, right? So we want to have everybody do, we want to do 6 estimates, and we have 3 estimating softwares to make sure we're doing it right, but then we're not tracking our time correctly, right? And so we review it, but not necessarily to make sure like, hey, is this the best software or not, but are they using the software? Is it worth it? And then how does it actually work?
Yeah, that's great points. I remember I worked for technology for a long time, and no matter what tech stack you have, it starts with people that can actually
Yeah.
do it and having a protocol in place. So you perfectly address those. So I'm excited that you were able to cover everything so thoroughly for that. So we've learned a lot. We've learned a lot about your company, and we've learned about, how you operate and where you operate. So for those people that are out there, where can they learn more about Fox and Partners?
I'm sure everybody just is dying to know how can I learn more about accountants and accounting. Foxandpartners.com, www.foxandpartners.com. You can also just search me on LinkedIn, Hurley Fox. I'll come up. And then on our website, you can read Google reviews, you can read case studies, you can see our team, you can read about some of the things we've done. We have case studies on there. And then you can email me, Hurley at foxandpartners.com. If you have any questions, we do free reviews of the tech stack, of balance sheets, of profit and losses. If you're looking to hire a bookkeeper and accountant, and you want to pick our brain about, hey, your best hiring practices, happy to talk to you about that. If you want us to look at your balance sheet to say, hey, are your financials even ballpark correct? We can do that. If you want to talk through kind of, hey, a forecast or what you should be looking out for, happy to talk. I love doing this stuff. I love helping small business owners. And so if anybody has any questions or wants us to look at anything, we're happy to do so.
That's wonderful. And there's a directory of Fox and Partners on our site on Outdoor Coffee Shop. So if you go to outdoorcoffeeshop.com and you look at the directory, you can find them and they're there and you can access their website. You can look at a lot of the information we have for them on the directory and circle back because there's contact information for Hurley and his crew. So, yeah. So is there anything you want to add before we end our session today?
I would just say if you don't have the right data, and you feel like you don't know where all the money's going, or you feel like, man, we're really good at what we do, I should be making more money. It's a great reason to reach out to us because I know so many small business owners that are amazing at what they do. They're top craftsmen in their field, but they're only making, let's say, $100,000 a year. And that just shouldn't be. In everyone who's listening to this, the supply and demand imbalance is so great that if you own the business and you're doing great work, you should be making hundreds of thousands of dollars a year. And if you're not, please reach out to us and we'll tell you how you can.
Yeah, that's great. That's wonderful. Well, Hurley, thank you so much for joining us today. This was really
Sure.
valuable for us. We're excited that you're on our site, and we're excited to continue to work with you. So, check us out. We have other, if you want to sign up for our newsletter, it's if you go to our website, outdoorcoffeeshop.com, there's a place to be able to sign up, and we have great articles on there, kind of an easy read for everybody. But thanks again, Hurley, and until next time, thanks for joining us on From the Ground Up.